Gold prices opened higher but ended the day lower, trading in about a $23 range, about 1820 up to 1843 in the October bucket. Clearly, gold prices have been trending lower since FOMC, since that 75 basis point rate hike we saw back last week. Gold prices have been trending lower, but we haven't seen that historically typical knee-jerk drop that we are used to seeing after some sort of event. Gold prices have settled between 1825 and 1850 ever since and haven't really seen much of a push below 1820. Yes, we have gotten down there. We haven't spent a whole lot of time down there. Clearly the market waiting for some catalyst event. Today we heard from the Fed chair himself. He was on a panel discussion with the heads of the ECB and the Bank of England. A couple of things that stood out from the chairman today, unlike his press conferences after the Fed meetings, was that he kind of talked about uncertainty about inflation, where they think it's going, as well as growth and how it might affect the rate hikes, might affect some of the growth expectations moving forward. So a bit of an honest testimony today from the chairman alongside, again, the presidents of the ECB and the Bank of England. Gold prices did settle lower today, but only modestly lower, again, holding in that 1825 to 1850 range settlement that we've seen since going back to June FOMC. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility also has been trending lower since June FOMC, but we're starting to see that flatten out a little bit. And today we saw volatility holding relatively steady as prices kind of continue to range in that 1825 to 1850 range, not seeing any major moves higher or lower. Everything's been slow and steady again since FOMC last week. Lastly, let's talk about what we have tomorrow. We get the claims number, that in the moment look at the job market. That is continuing to remain elevated week to week. The Fed would like to see that number back below 200,000. It's getting closer to up 230 new filings per week. We also get the PCE data, which is the Fed's preferred inflation gauge, and lo and behold, it will likely remain elevated. And at this point, then we get Chicago purchasing managers, which has been trending lower and is likely to continue to do so. It'll be interesting to see how that number comes out and how the market reacts. So midweek, we see gold prices still hovering lower, but not all in one big shoot, settling between 1825 and 1850 since June FOMC, and today we settled at 1826.